Dylan, and as we've been talking about, the financials really taking center stage today. Earlier today, CitiGroup said problems in the credit market would cause earnings at Citi to decline 60%. But CEO Chuck Prince also said things will return to normal in the fourth quarter. So is it the time now to buy financials? Let's bring in Donald Cox. He's global portfolio strategist with BMO Financial, along with Venita Phillips, who helps manage $2 billion of equities at Kanaly Trust. Nice to have you both with us. Welcome to the program.
Hi.
Thank you.
Venita, let me kick it off with you. Tell me what you've been doing with the portfolio in terms of financials. Have you been snapping up any new names or putting new money to work here as we've seen some moves upward?
We're not adding money yet to financials. We already had about a market-based position in financial services companies, but they are starting to look pretty attractive at this point, especially if the earnings numbers will return to more normalized fashion as indicated by the guidance today.
So the guidance today being, look, earnings are going to be down. We're going to see the impact of subprime and the mortgage slowdown impact earnings for the next quarter. To you, that means the worst has been seen. How do you perceive that comment?
Well, we don't think the volatility is all over in financial services, but certainly given that at least we know about what to expect from companies like CitiGroup. You had about a week ago Goldman Sachs coming out and basically pulling a rabbit out of the hat with some fantastic numbers. While we think that that's an anomaly, certainly the CitiGroup guidance today saying it's, the worst is contained. This is what it looks like. We've looked at September trading information, trading numbers, and it's returning to a more normalized, predictable pattern, and the market pays for predictability of earnings.
All right, Don, how do you view things? You're on the sell side there. Are you seeing interest increasing in financials?
No. I think the animal here isn't the rabbit, it's the cockroach. It's the single cockroach theory that if you get one bad announcement by Citigroup, that's all the bad news. Look, gold is at a new high. The dollar's at a new low. Oil's $80. The best performing groups in the third quarter were oils and base metals and golds. This is not a financial type market. They've been underperforming all year. And when they're in a bad market, they trade on their balance sheet, not their income statement. What we still don't know is what their balance sheets are worth, because they got all that crummy paper in there that never traded in the open market that they're valuing by models. And so there's got lots more of this to work out. And we've just started the resets on the subprime mortgages, so this winter is going to be tough for that. So to go back into the financials now is not to learn from history.
Well, somebody's on the other side of that trade, certainly today. Check out the market. You've got the Dow Jones Industrial Average 100 points above a record high, record territory for a number of the major indices. What do you think the market is getting wrong then?
Well, it's what's amazing. Of course, dollar devaluation in its early phases gets people thinking, oh, we're going to have good earnings. But it always ends up in some kind of crisis. I mean, Bill Clinton was right that a strong dollar is a good thing. So with the dollar plumbing new depths, you got more troubles ahead. But right now, it's like the first few drinks at a cocktail party. It feels great. There's going to be one heck of a hangover on this.
Let me ask you, Venita, your thoughts on that, because we don't really know sort of what the balance sheet says at this point. And meanwhile, I'm getting an email right now from Rich Peterson over at Thompson Financial. Performance since the end of August. Goldman Sachs up 26%, Bear Stearns up 16%, Lehman up 16.5%, Deutsche, JP Morgan, UBS, Credit Suisse, Morgan City, Merrill, Barclays. Across the board, we're talking about gains between about 0.5% and 26%. Is it warranted?
Nowhere near what the Golds did in the same period, Maria. And eventually, that is what Trotsky called an unprincipled alliance. It's got to break up. One side or the other will win. I'm betting on the golds, the base metals, and the oils.
Venita?
You can have the financials.
Well, we certainly like some of the areas that he's discussed. We don't think it's all bad for the financials. Certainly, if you're in a position to run a company like Citigroup and you have the opportunity to have a really bad quarter that the whole market is expecting, I believe that you would probably look very seriously at your balance sheet and wash out everything that needed to be washed out and come out next quarter swinging with some really nice numbers. And I think that that's what we're going to have.
Well, we'll see about that. Good to have you both with us. Thanks so much for your insights. We so appreciate it. We'll see you soon.